In the modern era, where technological advancements shape the destiny of nations, the concept of power has evolved beyond traditional military might. Historically, empires were built on physical assets like land, resources, and infrastructure, and they were safeguarded by armies, fleets, and air forces. Today, however, the digital realm has emerged as a new battlefield. Digital power, which includes control over cyberspace and the ability to wield influence through technology, is now as vital as traditional forms of power. Within this context, Bitcoin has come to represent a form of digital sovereignty. Much like nuclear power in the mid-20th century, which redefined global military strategy, Bitcoin is redefining economic strategy in the 21st century. It's not merely a speculative investment, it's a strategic asset, a tool for securing digital influence in a world increasingly dominated by cyberspace. Bitcoin's importance can be compared to monumental historical transactions such as the Louisiana Purchase or the acquisition of Alaska. These investments were not only economically advantageous, but also pivotal in securing strategic control over vast territories. Similarly, owning Bitcoin today is about more than financial gain. It is about securing a position of strength in the emerging digital world. As nations race to dominate cyberspace, the strategic value of Bitcoin becomes increasingly clear. Its ownership is akin to holding a stake in the future of global power dynamics, making it an essential component of national security. As Bitcoin and other cryptocurrencies continue to gain prominence, the question of political support for these digital assets becomes increasingly important. The upcoming US presidential election has brought this issue to the forefront, prompting discussions about which candidate might be more favorable to the growth and adoption of cryptocurrencies. In recent times, former President Donald Trump made headlines by speaking at a Bitcoin conference, where he expressed his support for the cryptocurrency. His speech, aimed at the Bitcoin community, suggested that he sees the potential for Bitcoin to contribute to America's economic strength and global influence. However, when asked about which candidate is better for crypto, Michael Saylor, a prominent advocate of Bitcoin, chose to remain neutral. Saylor, known for his deep understanding of the digital economy, refrained from making a direct political endorsement. Instead, he emphasized that the support of digital assets is a wise decision for any political leader, regardless of their party affiliation. Saylor's stance reflects a broader view that the future success of any nation will depend on its ability to embrace and integrate digital assets into its economy. He suggests that digital assets like Bitcoin should transcend political divisions and be recognized as a critical element of national economic strategy. This non-partisan approach highlights the importance of looking beyond short-term political gains and focusing on the long-term benefits that digital assets can bring to a nation's economy and its standing on the global stage. The rise of Bitcoin and other cryptocurrencies has not only sparked interest, but also deepened ideological divisions, particularly within the political landscape. As digital currencies become more integrated into the financial system, they challenge traditional views on money, regulation, and economic control. This has led to a growing ideological split between those who see cryptocurrencies as a path to greater financial freedom and innovation, and those who view them as a threat to the established order. In the current political climate, these divisions are becoming more pronounced. Some political figures have openly embraced Bitcoin, recognizing it as a revolutionary technology that can empower individuals and promote economic growth. Others, however, remain skeptical or outright hostile, citing concerns about the potential for misuse, regulatory challenges, and the impact on traditional financial institutions. Michael Saylor, with his deep involvement in the cryptocurrency space, has observed this divide firsthand. He notes that while some political leaders are beginning to understand the significance of digital transformation in finance, others are still hesitant to fully embrace it. Saylor likens the current moment to previous technological revolutions, such as the advent of electricity or the internet, where early adopters gained significant advantages, while others lagged behind. He argues that the success of nations, companies, and even families in the future will depend on their willingness to embrace digital assets and integrate them into their economic strategies. This ideological divide, therefore, is not just about differing opinions on cryptocurrency. It is about competing visions for the future of the global economy and the role that digital assets will play in shaping it. In the rapidly evolving world of cryptocurrency and decentralized finance, or DeFi, certain companies are leading the charge in bridging the gap between traditional financial markets and the emerging digital economy. One such company is DeFi Technologies, a Canadian-based fintech firm that has positioned itself at the forefront of this convergence. DeFi Technologies is pioneering the integration of traditional financial markets with the world of cryptocurrencies, creating innovative solutions that cater to the growing demand for digital financial services. The company's business model revolves around several key areas, each of which has shown remarkable growth and potential. One of the company's flagship offerings is its line of exchange-traded funds, or ETFs, specifically tailored for the cryptocurrency market. These ETFs have proven to be highly successful, generating a steady stream of revenue by attracting investors who are looking for exposure to the crypto market without directly holding digital assets. This business line alone has contributed significantly to DeFi Technologies' financial performance, with revenues continuing to grow as the market expands. Another important aspect of DeFi Technologies' operations is its arbitrage trading desk, known as DeFi Alpha. This desk engages in sophisticated trading strategies that exploit price discrepancies across different markets, generating substantial profits for the company and its shareholders. In recent months, DeFi Alpha has cleared millions in revenue, further solidifying the company's reputation as a leader in the DeFi space. Additionally, DeFi Technologies has made strategic acquisitions to enhance its capabilities and market reach. One notable acquisition is Reflexivity Research, a firm founded by prominent cryptocurrency advocate Anthony Pompliano. This acquisition has not only expanded DeFi Technologies' research and analysis capabilities, but also brought in a high-profile shareholder who is well regarded in the crypto community. As DeFi Technologies continues to grow, it has caught the attention of investors and analysts alike. The company's management has recently announced a massive buyback program, signaling their confidence in the company's future prospects. With insiders, including the CEO, holding a significant portion of the company's shares, there is a strong alignment of interests between management and shareholders. As the crypto market continues to evolve, DeFi Technologies is well positioned to capitalize on the opportunities presented by this rapidly growing industry. With its innovative approach, strong financial performance, and strategic vision, DeFi Technologies is a company that investors should keep on their radar. Michael Saylor has become one of the most vocal and influential advocates for Bitcoin, not only as an investment, but as a fundamental component of the future digital economy. His conviction in Bitcoin's potential is so strong that he has made it the cornerstone of his company, MicroStrategy's treasury strategy. Despite the inherent volatility of Bitcoin, Saylor has remained steadfast in his belief that it represents the best long-term store of value in an increasingly digital world. One of the key points Saylor makes is the distinction between short-term volatility and long-term appreciation. He acknowledges that Bitcoin is more volatile than many traditional assets, with price swings that can be daunting for investors who are not used to such fluctuations. However, he argues that this volatility is a small price to pay for the potential rewards. Over the past several years, Bitcoin has consistently outperformed other asset classes, appreciating at an average annual rate that far exceeds that of stocks, bonds, and real estate. Saylor compares Bitcoin's volatility to that of a high-performance asset that, while more challenging to manage, offers far greater returns than its more stable counterparts. He likens this to the difference between investing in a high-growth tech stock versus a conservative bond. The former may be more volatile, but it also offers much higher potential returns. For Saylor, the choice is clear. Embracing Bitcoin means embracing the future of finance. He sees Bitcoin as the digital equivalent of gold, but with far greater utility and potential for appreciation. As more people, companies, and even governments begin to recognize the value of digital assets, Saylor believes that the demand for Bitcoin will only increase. This, in turn, will drive its price higher, making it an even more attractive investment. Saylor's confidence in Bitcoin is reflected in his company's strategy. MicroStrategy has made it a policy to buy Bitcoin regularly, regardless of market conditions. This dollar-cost averaging approach allows the company to accumulate Bitcoin over time, smoothing out the effects of short-term price fluctuations. Saylor has made it clear that he intends to continue this strategy for the foreseeable future, as he believes that Bitcoin will remain the most valuable form of digital capital for years to come. His advice to other investors is simple: focus on the long-term potential of Bitcoin and don't be swayed by short-term market movements. By staying committed to digital assets, Saylor argues, investors can position themselves to benefit from the ongoing digital transformation of the global economy. In conclusion, the rise of Bitcoin and other digital assets represents a fundamental shift in the global economic landscape. As nations, companies, and individuals increasingly recognize the value of digital power, the strategic importance of owning and controlling digital assets like Bitcoin becomes ever more apparent. Michael Saylor's insights into the role of Bitcoin in the future economy highlight the need for a forward-thinking approach to investment and economic strategy. By embracing digital transformation and integrating digital assets into their portfolios, investors can position themselves to take advantage of the significant opportunities that lie ahead. The political and ideological divisions surrounding cryptocurrency are likely to continue, but as Saylor points out, the ultimate success of any nation or political entity will depend on its ability to adapt to the new digital reality. As the world continues to evolve, those who understand and embrace digital assets will be the ones who lead the way. As we move forward, it will be essential to stay informed and engaged with the latest developments in the crypto space. Whether through investing in companies like DeFi technologies, following the insights of thought leaders like Michael Saylor, or simply staying updated on the latest trends, being proactive in the digital economy will be key to success. The future is digital, and those who recognize this and act accordingly will be well positioned to thrive in the new economic landscape. Stay tuned, stay informed, and be ready to seize the opportunities that the digital future holds.